Good afternoon, everyone. Warm welcome to all of you. And I would like to thank the organizers of IFA Galaxy for inviting me here and giving me the opportunity to speak to all of you. It's always been a pleasure to come here. And today, as you can see, the topic of my presentation it says Thrive in Grey. So I'll come to the topic of the presentation. And recently I made a video on this. And I'll tell you where the idea actually came from. One of the key things why human beings find it very, very difficult to succeed in the stock market is because by nature, human beings are deterministic, right? We need closure. So I'll give you an example. What do I mean? If you look at March 2020, when COVID happened and everybody was shut into their houses and the stock market declined by 35-40%. So when COVID happened, everybody quickly concluded that human beings are the next dinosaur, and now, it is all going to get over. But after that, the market bounced back, vaccines were discovered, everything normalized. And in October 2021, in fact, November 2020 itself, the market crossed the previous highs. October 2021, we made a new high of 18,500. So what happens is that in March 2020, we concluded that human beings are the next dinosaur and everybody wanted to sell everything and run away. And after 18 months, in October 2021, we concluded exactly the opposite, that human beings are invincible, all the trees are going to grow to the sky. So what happens is that we love making conclusions. I'll give you another example. If something goes wrong with a relationship, if something goes wrong with a client, if something goes wrong, some colleague leaves us and goes, we would like to have an explanation. We would like to have closure that why did this happen? So much so that if you open, your business television, what happens is, today let us say the market falls. Then some smart cookies will come on TV and explain to you very coherently why the market has fallen. Then tomorrow let us say market goes up. The same smart guys by end of day will explain to you why it went up. Right? I'll give you an example of this. In October 2021, when the market made a new high of 18,500, we were explained that, other than outside the world, India is a oasis of excellence. And, we are going to do fantastically and we are going to be the fastest growing economy, etc., etc. Now, all those things being true, in May 2022, we were at 15,200. Now, when we came to 15,200, very intelligent people gave us explanation. Look, oil is $125. There is a war happening in Ukraine. US is raising interest rate. RBI is raising interest rate. All explanations were given. But again, in November 2022, we started making new highs. It went to 18,900. So what is happening is that the job of the market is to make a monkey out of all the people who are giving you all the explanations. Correct? Now, I'll give you an example. When you watch cricket, if you watch India and Pakistan match, what happens? One good over, you feel India is going to win. One bad over, you feel India is going to lose. You are quickly drawing conclusions. But what happens when you watch England and Australia match? If you are a cricket enthusiast, you will love to watch India-Pakistan match or you will love to watch England-Australia match? If you are a connoisseur of cricket, which match you will be able to watch properly? You will watch England and Australia because you are watching it as a cricket fan. Right? You are unbiased, you are open-minded, and more than you are not drawing conclusions in every over. Right? So what is the most important thing? That when you are investing in the stock market, you need to be like watching the England-Australia match. You need to keep score, you need to observe the match, but don't jump to draw conclusions in every minute. Correct? That is the reason why I find that human beings find it very difficult to handle stock markets. The reason is because we want conclusions, we want explanations, we want judgments. We are deterministic by nature. Whereas the secret to success in the stock market is you should not be deterministic, you should be probabilistic. This can also happen, that can also happen. But if you decide that only this has to happen, if that happens, the world will come to an end, then you are not fit to. So basic point is that we need conclusion. We need determinate outcomes. We need explanations. We want to judge. Whereas in reality, there is only context and perspective. There's no right or wrong. There is only context and perspective. And if you see the most famous investor, who's the most famous investor in the world? The most famous, most successful investor, very often quoted, is Mr. Buffett. And what is the most famous statement made by Mr. Buffett? His most famous statement is, be greedy when others are fearful and be fearful when others are greedy. Have you ever thought who is the others? Who is the others? When he says, be greedy when others are fearful and be fearful when others are greedy, who are the others? It is you only, right? So what is the reason for this? What is the reason for this? See, this statement that be greedy when others are fearful, be fearful when others are greedy, according to me, is a statement which is the kind of statement which economists make very randomly. See, I'll give you an example. The economics that you were taught in college, what does it say? The economics which you were taught in college basically assumes that human beings are rational and logical. Have you heard this or not? Economics assumes that human beings are rational and logical. How you can be greedy when others are fearful and how you can be fearful when others are greedy? Only if you are a rational and logical person. The other thing which your textbook economics tells you is that if the prices go down, the demand should go up. And if the prices go up, the demand should go down. That is also example of rational and logical. But tell me something honestly, does the demand go up when prices go down? Does it happen in the stock market? Does it happen to Mercedes cars? Does it happen to Rolex watches? Does it happen to real estate? Does it happen anywhere? In most cases, demand only goes up after price starts to go up. Now the problem is that we think investors should be rational and logical, whereas what is the reality? The reality is that the guys who taught you that economics, they themselves have given the Nobel Prize of Economics to people who study human behavior. Correct? In the last 10 to 15 years, 2 to 3 times, the Nobel Prize of Economics has not gone to people who told you that price will go down, supply will go up. It has been given to people who challenge this notion. It has been given to people who have disproved all these theories. And why do you think that the very same experts of economics are giving the Nobel Prize to people who are challenging the fact that human beings are rational and logical? What is the reason? The reason is because human beings are not rational and logical. Human beings are emotional and psychological. So if you start telling people that market is down, now you have to put in equity. Market is up, now you remove from equity. It is never going to work because you are expecting them to be rational and logical, right? So what I'm trying to tell you in the next 4 or 5 slides, what I'm going to explain to you is that for everything there is no one answer. For everything there is no right or wrong. More often than not, life is not about or, life is always about and. Like I'll give you an example. Business should be online or offline? See, previously Byju's was supposed to be online, but now they are offline. Pepperfry was supposed to be online, but now they have furniture shops. Correct? I've just given you 2 examples. There are zillion such examples. So for most of the things in life, the answer is and, it's not or. Okay? So see it from that simple perspective. Now in our profession, it is very, very common to be asked, is the market at top or bottom? Will it go up? Will it go down? And what do? We try to give perfect answers. We say, hey, it's close to bottom. Or we say, it's too high. What is the reality? The reality is there is no answer for this. If you compare it with the long range past, you are close to the peak. And if you compare it with the long range future, you are close to the bottom. So the answer is both. Is US, if you take the world map, America is to our left or our right? I don't know how to say in Tamil and all, but dunya gol hai. Right? So see what is the problem with all of us? We love explaining. We love to give conclusive judgments. You will be very, very happy in life and you'll be very, very successful if you understand that you don't need to answer everything. For most of the things, the answer is both. Or for most of the things, the answer is related to perspective and context. There is no right or wrong. Let me give you more examples. So is USA to our west or east? If you go Singapore Airlines, it is to our east. If you fly British Airways, it is to our left. If you are going to New York, it is to our west. If you go San Francisco, it is to our east. Right? There's no... The same way, that's why I said, that is the market at the top or the bottom. If you compare to the past, it is at the top. But if you're investing with an eye on the future, it is absolutely at the bottom. So life is actually not black or white. It is actually gray. Like today, for example, in our country, there is a humongous debate. Are we a democracy or not? Right? It depends who you are comparing with. It's never black or white. It is always a spectrum of gray. There is a very, very famous person, one of the co-founders of Ogilvy, Rory Sutherland. He said that the opposite of a good idea can also be a good idea. Like, should I eat Lebanese food or should I eat Chinese food? I'll give you another example. What is the opposite of love? Opposite of love? Let me tell you, hate is the wrong answer. There's nothing called unlove. You're used to the back button. The opposite of love is indifference. Love can be converted to hate, hate can be converted to love, but somebody who is indifferent, you cannot make them love or hate. Correct? So that's why he says the opposite of a good idea can also be a good idea. Right? So there are no good ideas or bad ideas. There is only context and perspective. Correct? There's a very famous philosopher, American philosopher called F. Scott Fitzgerald. He said that the test of first-rate intelligence, see, I told you at the beginning, don't try to draw conclusions. It is not about conclusions. It is only about context and perspective. Watch cricket like England-Australia match. Don't watch it like India-Pakistan match. What is the reason I said that? It says that the test of first-rate intelligence is the ability to hold two opposing ideas in your mind and still retain your ability to function. So, is the market at the top or the bottom? I don't know. Most of the times before making a decision, we first want to conclude, yes, market is at the bottom. No, market is at the top. In reality, you are expected to make those decisions without concluding whether it is at the top or the bottom. You only have to see context and perspective. You don't have to conclude before making a decision. If you run a business, for example, you all are entrepreneurs, you understand that you can never make a decision with 100% of the information. The best of decisions are made with 60% of the information. Correct? And most people will tell you that if you make decisions after you have 100% of the information, you're probably late or you're probably wrong in assuming you have all the information. So human beings want closure and they want determinate conclusions. But whether it is market or it's life, there's no top or bottom, there's no good or bad, there is no right or wrong. So don't try to draw conclusions, just try to gauge the landscape. Similarly, in our industry, there are lots of debates that your investment philosophy, should it be value or growth, should it be defensive or cyclical, should it be quality or should you buy cheap? There are a lot of these debates. What is the reality? Reality is BSE 500 is everything. BSE 500 is 96% of our market. So let's understand that if this is BSE 500, should your portfolio be growth oriented, value oriented? Should it be large cap? Should it be small cap? Should it be contrarian? What should your portfolio be? The reality is that when you try to make these deterministic choices, your returns will depend on which component of the market is doing well and which component of the market is doing badly. Whereas in reality, if you want to sustainably or consistently outperform the market, if this is BSE 500, your portfolio has to be some reflection but with better stock picking. So the choice, it's not about making choices. It's about doing everything but with better selection. So the point is that whether it is life or markets, don't try to look for black or white. You have to learn to be comfortable with gray. That is the key point. So I'm not here to tell you about this mutual fund and that mutual fund. The point is, it is about decision making. And in decision making, what is most important is you should be comfortable with gray. Don't look for deterministic things. Like, before investing, if somebody tells you, no, this is the bottom, put money now. From every level, you can go 20% down. Ultimately, what will matter is your holding period. Correct? If somebody tells you, don't invest now, this is the peak. From any level, market can go up 20% further. Again, what matters is your patience and your holding period. So what is crucial is the ability to be comfortable with gray, because everything in life and in stock markets is gray. You will never get, like a lot of time people ask, should I invest in debt or equity? What is the answer? Both. Correct? So these are few simple thoughts, I wanted to share with you. Life is gray, so are markets. You should learn to thrive in gray. And that is the reason why, if you see in our industry, what is the biggest category in our industry? Like even Vijay mentioned, even American trends, the biggest category is solutions. In our industry, what is the biggest category now? The biggest category is these balanced advantage funds and multi-asset funds. What does that tell you? The reason is because they are dynamic, because they are both, right? So this is the basic thought that I wanted to share with you. Thank you very much for listening me out. It's a pleasure speaking to you.